following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, on a day where not much is happening, at least yet. Kind of flat on the indexes, very flat on the volume, but we're off, 2 points on the S&P cash, or 2.5, 2.2 billion shares. So we're probably off about 500 million shares off what we were when we were starting the show yesterday. And it's going to be kind of interesting. It's got a very flat day out here, no real follow through. So that should be it. I digress, as we often do. So we're probably going to be looking for the action next week. We have lots of earnings coming. And, of course, we've got the FOMC meeting, although my guess is that that is, other than a lot of nothingness, I guess, probably a lack of volume going into the FOMC meeting. My guess is that nothing actually happens. They're probably going to push that off to one more quarter before they start talking about raising interest rates, but that is pretty much it. And just want to make a small apology to anybody that listens to the music at the top of the hour. I know what you're feeling. Yes, we get brutalized every day with some more just extremely average music, and we'll have to live with that. But maybe someday we'll be able to play decent music. You know, it costs just the same to play great music during the top of the hour as the horrible stuff that we sometimes play. Sometimes it's good, but not today. So I apologize in advance if you've got a headache or anything. Anyway, it is a great day, and a day without sunshine is like night. But on this day in 1932, we had history.
Then it's all just a little bit of history repeating.
On this day in 1932, the Reconstruction Finance Company is created under law, signed today by President Herbert Hoover. The RFC funded $1.5 billion. Can we think of this as the great-great-granddad of QE? Lends aggressively to faltering railroads and banks, as well as municipalities seeking to finance relief programs and public work projects. But it's just a drop in the bucket of the Great Depression. And a lot of people in academia think that we would have been better off to do nothing. That by actually throwing all the stuff at it, we prolong the recession years and years and years. I'm one to think that there was a lot to that. Instead of making it easier for businesses to fire up and get started, they made it easier for people to sit around and do nothing and therefore not pay taxes. And you got to balance compassion with logic. But that may have been the first step we took, leaning a little bit too far one way. Probably giving people soup, probably not up there with giving them a job. I would have tried to get them a job first. And what else could you say? There were a lot of things that happened during the 30s that were rather ridiculous, that only happened because of governments. And if you go back and research it, you'll find out that there was tons and tons of food that rotted out in fields that they were paid to produce and then throw away, lest those people in the soup lines get it, to keep prices up. So there are a lot of weird things going on back then. Everybody thinks it was just something that was perfect in the way it was done. I tend to think that they made it a lot worse than it had to be. Anyway, it is a great day out here at TFNN. I appreciate all my loyal listeners and the people that email me at path@tfnn.com, and those that like to, of course, give me a call at 877-927-6648. And well, what else can you say? You can post a message in the den if you'd like my opinion of anything else, too. So what else did we have? Let me move some stuff around here on my desktop so I can get to it. And it is, what else can you say out here? Well, I wanted to look at a few stocks that were moving out here today that had earnings. COF was one. If I'm not mistaken, it was down a little bit earlier in the morning. And did a little bit better after pre-market, but not a lot of movement right now, trading out at 77.54 is what I'm showing. Is that right? 23rd? Today's the 23rd. It is. I wonder if that, yeah, 77.54. Maybe I need to redraw that one more time. Okay. Yeah, I guess that's right. Just looked weird to me. Now, what you have done is test the low yesterday of October 17th at $75.08. Had 9.7 million shares, just 7.5 million shares yesterday. And a little bounce out of here, but of course went up to 78.72. Gave a lot of that away, and that is this gap down from the 14th. That gap didn't have tons of volume, but it did have 4 million shares on the way down, and you only have 3 million shares, and it looks like it's going to be light today. So maybe you get 4 million by the close, but an interesting one. Now, the one that probably has everybody talking is UPS. Now, if we were doing a bang-up job over Christmas, you would think UPS would have had good earnings, but not so far. And also you know, they do a lot of flying. You got to figure those jets got to be making them a little bit more money now without paying so much for fuel. But they had some unkind words for their future and got smacked fairly hard, down on fairly monstrous volume today of 14.3 million shares so far. Back into this gap that happened on the 31st of October. So you pretty much wiped out the last 3 months of trading in United Parcel. And of course, everybody thought that things were just going to be fabulous, absolutely awesome. And I don't know, what else can you say about that other than it wasn't true. Now, FedEx did come out and say that they are different. It's not all brands the same. They are off a little, but my question is, what are they going to talk about in the future? And did they just say this to kind of piecemeal out the data? But they are down. Volume picked up a little bit more than the last 2 days. Volume has been light going into the December 8th high of 183.51. We didn't get there. Got to 181.49 yesterday on 2.1 million shares, but now starting to pull back. Now, what you can say is that you had a strong leg down from that December 8th high to the 163.57 December 17th low. And as we look at that, coming back up, not a lot of energy in this last leg from the January 14th low back up. But I think they've got earnings coming very quickly. What's the date on them? Let's take a quick look. March 18th. So they got a little while. Maybe that's it. Maybe they just did a better job. But unclear at this time why UPS would be so poor compared to FedEx. But I'm sure there'll be a lot more work done on that in the near future. Other stocks of interest out here, let me get to them. That one was very interesting. ISRG was another one that I felt was very interesting, mostly because of what they said, which is look for lower earnings going forward for the next year. And everybody ran out and started buying it this morning. Very unclear on why they would do that. Normally, a company doesn't lie to you when they say that the Forex trade is really going to hurt them. And we got down here pretty much to the bottom of a gap that started on the 18th of December. But I'm starting to think that there is some kind of Pavlovian response to buying anything that has a pulse if it dips. And of course, it got right up to basically unchanged on the day, 526 for the high. But you know, it's basically off $2 now. Very interesting trading, to say the least, in this. Now, part of that may have been there was a huge amount of options position on it, and we may have a big hand behind it, holding it up until these options roll over the next couple of days. If you see the options get absolutely dirt cheap on this, on the put side, you may want to be taking a very close look at it, because for me, this thing is topped, and they've said this thing is looking ugly and going to look ugly. But it seems no one wants to listen. And that also worries me somewhat about this market. Somebody said, yeah, UPS is a union shop, and that is true. But I don't think that has to do with the difference in, because it was actually revenues. It wasn't so much that that their expenses went up or anything else on UPS. It was literally revenues. They didn't ship enough. And my question is, did the spigot just go off because FedEx came out just a little earlier? Did FedEx coming out a little earlier miss a huge drop off? The reason I bring this up is I was getting my car repaired on Monday, and the auto mechanic telling me said that from the last week of December till today, the volume has just been, that he's seen, dropped off just tremendously. And I thought, well, maybe a lot of people actually did spend a great deal on their credit cards, and the hangover had already started, at least for the auto business. But I was the only, pretty nice place, and every time I've gone by it was, they've had 3 or 4 cars in there. I walked right in on Monday. Now, it was Martin Luther King Day, so maybe that had something to do with it. But he said that that was pretty much it, that he'd get business in the afternoons now, but not during the morning. So maybe there's something more to it, but seems to have repaired my vehicle. Normally, I wrench my own cars, but I had to have some welding done, so had to have somebody else do something. But I do digress, so let's go on to some of the other stocks out here of note. Starbucks, SBUX. And, of course, we all know that the end of the world is going to be signaled when a Starbucks opens up in yet another Starbucks. It's interesting. Lots of volume, nice break of the high. You would probably want this thing to come back to 84 to buy it if you are thinking it. But you had everything. May have liked to seen a little bit more price spread out here in it, but that may be nitpicking this thing. You have a gap. It's going to have probably the biggest volume in the last year. It broke above the previous high of December 8th that had 7.3 million shares. You got 14. But there's kind of, and I brought this up to a couple of people that I've tutored, and that is it's almost a Goldilocks kind of thing. And we'll get into that when we come back. Give me a call at 877-927-6648. Email me at path@tfnn.com and or post a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're looking at stocks that are moving, and it had some earnings. Valero having a little pop out here today based on raising their dividend. And I thought that there was a little bit of discussion about maybe it was self-serving because someone had a lot of shares that was a head of the company. I don't know if it was the CFO or the CEO. I assume it's the CEO. I didn't catch the whole conversation, but lacking the volume, but certainly having the price move out here from about $48 to $50.39 for the high. So I'll have to take a look at that. Let's take a quick look here and see what the indexes are doing right now. 2059, 75, 2.34 billion shares. Again, volume very, very light. We're going to go to Kevin in Sterling, Mass. How you doing today, Kevin?
Hey, Dave. How you doing?
Pretty good.
That's good. Hey, I want to ask you a quick question. I mean to ask you this for years because you're the one that sort of talked about this company, Molly Corp, way back. And it's down to is it going under basically?
Yes. Well, let me put it this way. I brought this up, I don't know, a few weeks ago when someone called.
Okay.
And so I'll repeat it because I know we do get new listeners or people don't catch the show every day.
Yeah.
And they shall be chastised greatly for not. But anyway, I appreciate you for listening today, at least. Yeah, I tried to buy this thing back at about 20 or something. And at that point, what happened was someone had a bunch of warrants and they went ahead and cashed those warrants in, and they took a fairly decent loss to do so.
Uh-huh.
That told me that, one, they probably knew more than me because they had warrants and they got the warrants. And that probably was a bet on Molycorp going bankrupt. If you go back through the news list, you can probably find it and find out who it was. I don't remember what it is, but I think I ended up losing a dime on it and got out when I saw that news article.
Wow.
At like $1.15, because it was when somebody, an insider, gives up the ghost on what should be a huge winner for them in those warrants.
Yeah.
That tells you that they pretty much have given up on it. So and they probably, too, know more than I do.
Mm-hmm.
So, yeah, it didn't look bad back there at about 115. And I think this is where we bought it, right in here. But it just kind of bounced back down and went back lower, and it started going sideways. And then that news article hit, and I knew exactly what it meant. So if you ever see anything like that where there's a stock down here, same thing happened in Radio Shack. And I'm going to talk about that tonight on the Tom O'Brien show. But it is when these companies, when you start seeing people cash in warrants when the stock is like $1 or something,
Mm-hmm.
That tells you that they're taking an enormous loss, which means that they probably know that whatever money they're going to get now that's going to be it.
Yeah, I give you credit. You really, I mean, you that thing came out. That thing was going like rockets, and then all of a sudden, and I've been watching it just because you kind of been recommended it, and I've just seen it go down and down. And I checked today, and I go,
I think
whoa.
I think I got out of it at about 45 or
40
something. Went to
yeah, because
79.
I got your newsletter. We got out at 45. The
Yeah.
other question, one more, and I hope I got time if no one's online, is this Triple D. You were on the money on that thing, but it is slowly going. I don't think it's going to go as bad as this one, but.
Did you read my newsletter 2 weeks ago?
No, I didn't. No.
Okay. There is a great explanation of why.
Really? Okay.
Does this mean that it's going to settle in here? It did. And all I knew was the chart looked fairly horrible. We shorted this thing, I think in the Tech Insider, down 3 times. So we got a lot of the different moves on the way back down. This doesn't look bad out here. But the reason why it's down here, the technical reason, I'll leave to my readers in the Tech Insider. But there is a fairly decent reason, and it only became even knowable, at least for the general public, a couple of weeks ago. But I will tell you this: there is significant competition in this marketplace, and it comes from the consumables being very cheap from that competing device.
Right. Okay.
Or all competing devices. And that's why, you don't want to look at this with without looking at SSYS. And, I mean, that pretty much tells you everything that you need to know in this one. We got a great deal of cash out of Stratasys, but I think I was, in the daily newsletter, I think I lost $4 in a short or $3 in a short on it. Where it should have bounced, and it did not, and it's just went all the way back down to $70. But we'll be back in. Thanks for the call. We'll be back in just a second.
Right.
And what else can you say? Got this one short a couple of times, I think, or at least one good time with options. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And interesting day out here, even if it's a little cold. Had a question in the or cool. Light volume, let me put it that way. I had a question why for the light volume, and my guess is that we're now probably on hold, other than a few stocks that have earnings for the FOMC meeting. My guess is that, we had a fairly big run out here. We're probably going to have some kind of pullback over the next few days, and that pullback is probably going to tell us a little bit as volume comes in. Yeah, I'm going to say it's probably going to. The question is, what do you think they're going to do? And they're not going to do QE again. The best you could hope is they don't raise or talk about raising interest rates, although they may. But all I could think of today was watching the dollar index race up to 105. What did it go to? 105. Went to 95.48 and like a rocket. And intervention, it looked like, I'm not exactly sure where the intervention came from. Normally this stuff is coordinated between the EU and the United States, but someone intervened when the thing hit at 95.48 and they start trying to hammer it back down. My guess is the only thing they can do is slow down the move to 98. Probably will get to par between the euro and the dollar. But for the dollar index, everything I looked at looks like 98 to me, and they'll smack this thing down. I think it got back down to 94.30 or so on the dollar index, back to 94.80. But my guess is we probably see this thing, I'm thinking in the next week or so, or maybe 10 days at 98. I can't imagine another, if I would have told you a year ago this thing moved $3 in 2 weeks, you would have said I was insane. But it certainly looks to me like there's just no stopping it, even hammering it. And intervention only slows it down. And a 50-cent pop off the intervention this morning still makes me think we're going to put a lot on there. Gold, of course, has pulled back. Missed a gold trade yesterday. I wanted to get it for the trade back, and probably I was about 30 minutes early, and I had a very tight stop. But we were looking at the JDST in the daily newsletter. But it is saying, we're off, what, $10, which is not a lot, 12.90.80 on gold. But my guess is we're probably going to have a fairly decent pullback in the junior miners, as gold price is not high enough for those. Probably the bigger miners and the more well-established will probably do fine, but the juniors still look like they have a problem. Pretty nice move out of JDST. JDST. I'm going to put this on my list of things that got away. But pretty good indication from me watching this intraday that this thing wanted to come down and at least bounce back up to probably about $10. And my guess is if you want to get long some of these gold stocks again, that $10 level on the JDST would be probably where you wanted to look at this thing. But light volume today on the pop back up. But my guess is $9.90, $10 is probably where this thing is going in the next couple of days, with just a normal retracement in some of these gold miners, especially the, of course, less well off, less well endowed. Anyway, let's get back to some other stocks. See, do I have anybody else emailing me? I had a couple of emails, which I answered during the break. We had Honeywell, H-O-N. Let's take a quick look at that. H-O-N. Now this thing's breaking, and it's a little light on volume for this time of day. The question is whether it's going to hold the previous high of December 24th, 102.39, 4.4 million shares, which is the highest volume within 0.5% of that high going into that high. So pretty close. So 3.8 million shares today. So still need 600,000 shares, but kind of starting to roll over here a little bit. This was on earnings, beat Q4 consensus by 1 cent, lowered expectations though, and reaffirmed basically its fiscal year 15 guidance. But some warnings that if the dollar continues to move, of course, they could be weaker. We talked about UPS, we talked about CLAC, and we talked about Altera and Xilinx, and it looks like pretty much all these semis are probably on the way back down a bit. CLAC came out with their earnings, it beat estimates, but didn't do it any good. Basically, their forecast is for lower EPS this year, down maybe 63 to 87, pretty wide, but way off the 97 that everybody had been looking for. So this thing's back down to basically its base. That $65 level has been support for KLA 10 core, he said, and that is mostly a pretty wide trading range. But $66 on November 22nd is 26. December 17th, $66, and January 14th, 64, 61. It bounced out of that on light volume, and you're right back down to 65.30 today for the low. But if we go back to Altera, same kind of thing is. Earnings weren't that bad, but kind of saying things are probably not going to get better, but are going to get worse, especially with the dollar exchange rate. Pretty much a cardinal of every one of the earnings calls so far that I've listened to, they all say, you know, things are not bad and we're going to get smacked because we had some hedges that basically took a little bit off of what we had today. But for the most part, pretty tragic going forward as long as the dollar continues to strengthen and we have to repatriate that money either through osmosis where we really don't bring it back, but we have to account for it and the dollar exchange rate. Trulia, one of the stocks actually doing better today, jumped on the rumors of a merger. I don't know how true this rumor is, but it did make a fairly nice low out here compared to the November 6th low, $94.23 on November 6th with 4.5 million shares. Did half that on January 7th, had a nice little bounce, had some bad news, came down on some decent volume, just went sideways for 3 or 4 days. This rumor may be nothing more than that. A lot of people have been short this stock, and I would watch this over the next few days. If you got to 111, which was what on the retrace, you could basically came up to the confluence level. I'd been watching this and just didn't want to do anything today, but it really went to the bottom of confluence. I'd like confluence to be a little bit tighter on this. It's about $5. You can look at that as a congestion zone, but you need probably about 118, 119. If the volume's still very light and this thing can move back up there, you may have a great trade back down to 92.41. Not a bad trade. Maybe good. Have to look at the options in that. I didn't have time today to get to it. To perform AVP. Take a quick look at that. AVP. And again, you can give me a call at 877-927-6648, or you can post a message in the den. Can I look at TXN? I will right after Avon. Avon downgraded market perform at Wells Fargo. I don't know. Maybe they're wanting to buy this thing. Had a nice volume on the upside with a short squeeze yesterday and right back down the other side. My guess is they know somebody or are short themselves and didn't like yesterday's bounce and went to throw some cold water on this over at Wells Fargo. X, well, I shouldn't have said X. I should have said Z. TXN. And what do we have here? Texas Instruments, this is going up. Energy's not all this bad here. Volume yesterday, 4.5 million shares, 2.7 today. This thing needs to test $56 from the December 8th high, 5.9 million shares. And as you look at that, what are we, 80 cents underneath that, 70 cents? So, probably going to tag that Monday. And that's going to tell you, but light volume today out here, just like the general market, makes me think that you might even see that wait until the FOMC meeting before it gets tagged. And if you get any volume there, maybe you got to break out. If not, probably in a bigger trading range. But none of these companies right now look that good to me. And like I said, you want to look at Altera and Xilinx as the canaries in the coal mine for semis. So both of those are down. That tells me that I would probably not want to be long that sector, and probably they lead anywhere from 2 to 4 weeks. So, it was news now, but it doesn't take very long in the semiconductor space to get this out. Now let's see what else is going on out here. Germany was up 2.5%. France up almost 2%. Spain 0.7. Portugal up 0.5%. Italy 0.2, and Irish up 1.9%. Greece was up 6%. But I don't know what people are thinking out there unless the news is totally false. I just don't see any way that the Germans are going to throw cash at the Greeks after already putting in $21 billion to bail them out before, only to get stiffed by them again. Maybe they think it's good just to keep them in and using the euro, but I just can't imagine them doing anything that would pacify the new, they're communists, we'll call them communist socialists, but the guy that's running he's a communist. He'd take over with force if he need to, a true believer. I digress. Let's take a look at some of the other stocks that have been moving. Let me get some of my scans going on out here real quick. Was that it? No. I wanted to look at that one there. I wanted to see how some of these stocks had reacted from the day before. Now, yesterday I brought up zinc, and this thing had a huge move off the floor this morning with volume. And it just looked to me like the thing was ready for a bounce if anybody was listening yesterday. The October 2nd low at 1388 had 3.6 million shares, and basically we went into it and volume very light, 1.6 million shares yesterday. Thought there was going to be a nice pop in this thing. It certainly didn't last long. This was a deal where some warrants went out at a better price than most people thought. So I don't know what else you can say about it other than they sold into it as soon as possible. I understand Andy Heck's doing an article on this, so you probably see that on Monday for Horsehead Zinc and how zinc fits into all the metals out there and maybe what it can tell us compared to copper and those things. Let's take a quick look at some of these other ones. We said Workday looked like it was going to bounce a little. Very light volume out here today. Still want this thing to come back and test $75.23, but that may be very interesting. One of the ones that interests me most out here. Some of the other stocks of movement. Okay. What else is going on here? Just need to babysit a couple of my positions. Okay. Yeah, that looks good. That looks good. That looks good. Okay. What do we have? Okay. Just looking at my positions, folks. They're all back in the ball game. And that reminds me of there were two commercials that played all the time when I was a kid, and even a young adult, let me put it that way. There was a overnight TV station. I remember when TV started staying on past midnight in our area. And there were two of them, but there was one, a constant ad every single night, and it was always this. It's a whole new ball game with Apollo hair bond. And, of course, it looked like someone had taken a carpet and a staple gun and stapled to the guy's head, but always a fun ad. And the other one I loved so much was The Lone Ranger, financing innocent victims of bankruptcy and repossession. Those two ads were on back to back all night long. Anyway, LA, we talked about this several times, and certainly looked like this thing had at least temporarily topped out. The September 15th high was $43 on a huge spike in gap, up 4.6 million shares. Went over it by 13 cents on January 20th, but just 1 million shares, and that pretty much a good indication you're going to get at least some pullback. Energy on the way back up was not that bad, but the downside is, one, it did not test the low of October 16th, missed by a couple of 20 cents, and it had higher volume out there. So if you're looking for stocks in big trading ranges, you might want to look at this one. Kind of interesting. What about $8 trading range? We'll be back, look at a few more things, and then hand it off to Tom O'Brien.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bluebird terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah, a little bit of trombone shorty. Let's hear a little more. I think that's called Hurricane, but boy, what a wailing song. And yeah, Shirley Bassey and the Propellerhead song. That's also great. History repeating. But I digress. Anyway, looking at some of the other stocks that were closer, just giving some signals out here. We want to take a look at it, just a couple more before we end up the day. We were talking about Penn Gaming looking like it came up and hit this gap. It doesn't seem to be doing a lot. I wanted to also look and see how some of these stocks that were in the solar sector had been doing, because they are down on very light volume. So you may get a 1 or 2 day bounce out of these things. It's going to be a lot more about what crude does. And what do we have here for crude? off 73 cents today. So awful hard to get anything going. As many people say that it doesn't trade, or solar stocks don't trade with crude, it always has, and pretty good correlation out there. But what you need in Solar City, of course, is a test of $45.91. But volume is very light out here. Not a bad looking chart. You are into those candles, but I don't think you could bite until this thing proves the point. And I mean, probably goes down to $45 and closes back above $45.91, and all the sellers are dried up. I think this is a horrible sector, but yeah, maybe I've been wrong before. Maybe there's something left in the tank on these, but they scare me. Infosys, we talked about this one where it jumped above without any volume of its previous highs, and kind of doing a little bit of reversal here today. Kind of like the market. We're off 6 points now on the S&P cash. Still no volume up or down for the last few hours. 2.55 billion shares. But this thing, you want to be watching this one. It's December 1st, $35.18, 3.9 million shares. Yesterday we had 3 million shares. Today 2.5. So let's say we're going to get 3 million shares today. It's going to be a little light, 25% light. What I'm looking at is this big gap. Where I think that was earnings out here, from about $32 to $33, and that's like a double gap. That gap actually started back in December on the 8th when it gapped down. It gapped back up over it, and one of the things my software does, which is kind of neat, is I see how many times that you get double and triple gaps at the same levels. These stocks like to, when there's no trading there, they just bounce back and forth over it. You need to be aware of where those gaps are. But if you're watching this on Tiger TV, you'll see two different colors. One signals the first gap from that December 8th gap down, and the other one starts with this gap up on the 9th. But probably looking at this thing pull back into about 32.75, but I'm starting to see that move now. Let's see what else we have out here. Workday. Want to see what Workday did out here. Interesting. See how much time I have left. Oh, we're almost out of time. Let's go back just one more day. I wanted to see if there was anything else out here, because there was a few out here that did. We talked about Ann Taylor earlier in the week too. I was talking about it going into this gap. Gap up actually happened on February 6th of 2014 with 2.4 million shares. It just spiked it on the 21st, and you get a little bounce out of these things. Still look pretty horrible out here, and they need to base out, so don't get too excited just yet. We'll see you in a couple hours on the Tom O'Brien Show, and if we don't see you then, we'll see you Monday, same bat channel, same bat time. So when you can, not when you have to.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.